Today what we're going to talk about is what's traditionally called floor pivots or floor trader pivots. Now, a lot of people don't think these have any value anymore, and I would have to say, well, I understand where you're coming from. Their logic is that those came from the days when open outcry, the pits were open, and there were floor traders in the pits, and that's where they came from. And I get it, and that is a reasonable logic. However, things that work in the market are the things that have a self-fulfilling prophecy and that a lot of people respond to and react to, buy off of, sell off, and take profits into. Unfortunately, they usually do it backwards, and that's why they lose money. But the market still responds to those levels. So this is especially true of support resistance. Now, I've heard that not only do a lot of people still use floor trader pivots, it's just kind of a carryover, and because it's also an indicator that is available on most charts and most trading platforms. And so it's right there, ready for people to use. But also I understand there's algos that use them. So it's not just back from the days of yore with open outcry, algos are using them as well. So there you go. All right, so what these are, and I'm not going to, this is not a basic lesson, this is a more intermediate lesson. So if you want to learn more about the basics of floor pivots, then look it up on Google, go to the source of all knowledge, the omniscient Google. Actually, Google doesn't know anything, it just refers you, right? It's the ultimate networker. It's like, oh, I don't know anything about that, but I can refer you to someone who does. That's what Google does. And it does it pretty darn well, I'd have to say. So the basic idea with floor trader pivots, and they're just a mathematical equation, a formula. You can look it up. It's on Google, absolutely free. But the concept is this. So we've got our pivot point or central pivot, it's sometimes called. So PP, pivot point. That is a point of equilibrium for the day. That's where the market would be considered neutral. And then above that, you have R1. That stands for resistance level 1. And then below it, you have S1, and that's considered support level number 1. That's what S stands for. And so these are just built-in static lines for the whole day. They don't change during the trading day, and so they are not dynamic. They are set in stone before the day even begins. And so one of the advantages is it gives you these levels before you start the day where you can look for support, resistance, buying, selling, and people taking profits. All right, so in that way, it's kind of a leading indicator, more of a leading indication, because it's not really predicting what's going to happen, but it's telling you where to look for potential levels where the market's going to stop. So if I squeeze this up here, you can see that again. Okay, so there's your central pivot. As we go up here, R1, R2, there's R3 way up there. And then below it, support 1, support 2, support 3 way down there. Okay, now these are the levels that most people use. So the people who are using this, and they are commonly used, like I said, everybody and his gerbil is using this. So gerbils don't make good traders, by the way. So don't depend on your gerbil for trading, but lots of people use them. Here's the secret sauce. The secret sauce is something that very few people use, and that is these gray levels right here. And you might say, well, Barry, what are those gray levels? And I would say, excellent pregunta. Excellent question. So this is just very simple. It's so gall darn simple, it's crazy. It is the halfway point between the pivot point, the central point, in R1, that's why it's R1-PP, or the halfway point, 50% of the distance from the pivot point to S1. And that's it. It's as simple as that. You don't need to be a rocket surgeon to figure that out, okay? But very few people use them. In fact, I hardly hear of anybody using them. I can't think of the last time I heard anybody use them. I'm not saying I'm the only one, but there's some other people out there, but there's not very many, not very many. And yet, look at this. Again, does it work or doesn't it work? Well, the proof is in the price action. And so we come up here, we don't get up to R1, but where does the market find resistance? Right there at these are called mid pivots, by the way, mid pivots. And you can put these between any two pivot levels. So you can also go down between or below S1 and put one 50% between S1 and S2. and can go up above R1, put one halfway between R1 and R2, and I do, by the way. So these are called mid pivots. And does the market respond to the mid pivot? Absolutely. Does the market respond to the mid pivot down here? Absolutely. And so do they work? Well, I don't really like saying that things work or don't work in trading because you've got to be flexible, and there are support resistance levels, but whether the market holds any support resistance level, these or any others, depends on the market action, the impetus the market has behind it, the strength, the buy and sell, the supply demand as it goes into those levels. So you've got to be watching that along with these levels. So the potential levels for buying and selling and taking profits. And then you watch the price action as it comes into them. But if you didn't have these mid-pivot levels, there's nothing else there. And you'd be wondering, well, why did the market stop there? Why did it stop there? Okay, now you know. I encourage you to draw these on your charts. And if we go into the next day, notice it just kind of hovers around the mid-pivot because that's a neutral zone. There's just a choppy market in here. And there it goes, boom, goes right up to the mid pivot again, comes on back down. Next day, again, starts right around the mid pivot, goes up, and then what's it do? It hovers around the mid pivot. And eventually it goes up to R1, blah, blah, blah. Okay, so that's the main point. That's really all there is to it, but sometimes the simple things are the best, and if most people aren't using them, it gives you, like I said, an invisible ledge. One last tip I'll give you. This is a pro tip. I don't use it every day. So the days that it is the most powerful, and you can kind of see it here. This actually just reminded me here in real time. So the days it's the most powerful is when the previous day was a wide range day, because the floor pivots are calculated based on the previous day, high, low, close, and so forth. And so if it's a wide range day the previous day, then your normal pivot levels are going to be far apart. And so to put the mid pivots in there, give you the support resistance levels if it doesn't reach all the way out to the next floor pivot. If the previous day was a narrow range day, then you may not need to use the mid pivots because the market will just go from the regular pivots from one to another. So a little extra pro tip there. All right, well, I got a lot of other stuff for you, by the way. One of the other things that you'll want to use in conjunction with this or any support resistance level is a timing tool. You've got to use this. This is just price, right? This is price, but we've got two axes on a chart. We have our price axis, of course, that everybody knows about and uses, and you should. But the other axis on the two-dimensional chart is time, and that's along the bottom. And this is something that most people don't use. You need a timing tool to know, well, okay, let's look for the conjunction of time and price. And this is something W.D. Gann was really big on. Look for the confluence of time and price. I can help you with that. I give away my timing indicator absolutely free. Go check that out. There's the link to go check that out. Free video, and I actually help you get it set up on your charts and everything. And also, I've got my rubber band trade, which is a complete trading method, and I give that away for free as well. Go grab that at rubberbandtrade.com. All kinds of free stuff for you. Keep up the good work and send in any requests that you might have for future video tutorials.